So much optimism pinned on the reopening of China going forward. I mean, BHP included. I'm just wondering, how are you assessing that and the risks that may come with it?
So yes, we are optimistic about the outlook for China as well as for underlying business performance, but I'll come to that in a second. In respect of China, we have seen the big two policy shifts recently around zero COVID and some more pro-growth policies being put in place for the property sector. That's been backed up by some pretty firm statements from the government there that are pro-growth for the year ahead. And very importantly, we're seeing the green shoots come through since the start of this calendar year. Increased mobility figures, more bank lending, improved business sentiment, property prices up in some cities. So that kind of reinforces the positive outlook for that we have for the year ahead, which we expect to offset slowing growth in both the U.S. and Europe. Now, the other cause for optimism is the strong underlying business performance that we've turned in. And you see that coming through in the recent half. Production up across all our major business divisions. Another record half in our iron ore business, which is the biggest business in BHP. And we've stretched our lead as the low-cost operator. So now 12% has opened up between ourselves and the next best, which gives some sense for the way that we're navigating what is otherwise a high inflation environment. But the focus on operational excellence is standing us in good stead, and we expect that's going to give us momentum moving into the next half.
Well, Mike, give us a sense of how that may impact demand for BHP's commodities. Where we'll see the biggest growth?
So we are forecasting, stronger growth in both China and India, or the growth in China and India offsetting perhaps some slightly weaker growth in the U.S. and Europe. Now, it's very much commodity dependent. So steel, of course, the game's all about what's happening in China, at least from a seaborne iron ore and seaborne iron ore perspective. We believe that as some of the policies play out in the property sector, initially that's going to mean more housing completions, which will be positive for copper, but that will then shift into housing new starts, which will be positive for steel. So commodity dependent, but overall, we expect that the uptick in growth in China, strong growth in India is going to bode well for the commodities that we produce.
Mike, what you're doing at the moment essentially is perhaps what you've been terming future-facing commodities, metals that will be needed in the renewable era, if you will. How are you going with that? And does that mean that after the selling of these two metallurgical coal mines, Daunia and Blackwater, does that indicate that you're going to get it out of the coal business in order to concentrate on that future-facing side of things?
We've been very clear and consistent over recent years in terms of our strategy and how we think about the portfolio. We want a portfolio that's leveraged to the big mega themes unfolding in the world around us. That's population growth, it's increased standards of living, and of course the energy transition. Now, that's seen us focus on growth in copper, nickel, potash for more sustainable farming, higher quality iron ore to aid steelmakers in their decarbonization efforts. We've also been clear that the highest quality of coals for steelmaking are going to see upside in a faster decarbonizing world, because they're needed to help steelmakers get greater blast furnace efficiency and to reduce the emissions intensity of their steelmaking processes. And so all of our effort in coal has been around concentrating our portfolio on only the best of the best. And the decision announced today to pursue divestment of these two mines is wholly in line with that strategy.